joining me, everybody. This is a selection of altcoins right now. I'm going to take a look at Cardano, going to take a look at BLXZ, ZRQY, whatever you name it. All the ones essentially that are being traded on the futures account on Binance. Thanks for joining me. Let's see what we can find out by looking at the charts. Run those intros. Here by taking a look at the Matic chart. This is a rather low time frame. You can see very much the V-shaped recovery that we've had since that stop hunt last night. Very good. What's this one doing that maybe the others aren't is it's taken out the areas that we had seen here structurally as it kind of depreciated before completely tanking and then coming back up the way. Very nice to see, getting these increased highs drawn in here on the low term time frames and seeing that of course we've got convergence, little bit of bearish divergence here on the RSI, maybe something to be taken an eye out for, as we can see the same thing happen here on the MACD. But will we just simply burn that off and push up the way? Could well happen, given that we're in a good degree area of support and resistance. Getting a little taste of this sort of thing at an area of support and resistance happens frequently when you're doing your charting. No big deal. Just, you know, look and see at your if you look and see. This is so loud for me, it's distracting. Turn that down a wee bit for me. Just look and see if you're getting a bit of the old bullish or bearish divergence, etc., and it's happening at a degree, a price, where you've got previous support and resistance. And as you can see here, this is a very significant one, being the two significant support zones after we've come in for our highs recently. Then maybe the market is asking a couple of questions, at which point you could look towards a couple of little key things to say, well, so long as we stay above the 236 Fibonacci retracement point, which we're doing right now, and that comes in there at 10.8 cents, nearly 11 cents, but not quite, then we're still in line for potential upside. And zooming on in a wee bit further and saying, well, we've also got the moving averages here, and staying above them, rather tasty, up towards the 4-hour time frame. Then you can see that as well, while this is maybe, you know, happening on the low term time frames, that little question and whatever else, that really we're doing quite well here, having come back up above the neutral line on the RSI, not actually breaking into the bearish control zone, and then staying above the neutral line here on the no sure thing indicator, up above the neutral line of the stochastics, pointing up the way, nice and erect, what you're looking for, and about to have a cross here on the DMI. This is the positive story over here on Matic, and that bleeds itself out across the other main coins that we're looking at. So let's do a selection of them. For instance, Cardano, not got that DMI cross over here quite yet. We have recovered a little bit, not structurally taken out those other areas quite yet, though. We didn't come down to the bullish or the bearish control zone. Good stuff. We are above the neutral line over here. Interesting point to be had, though, is that we did get a nice dose of the old hidden bullish divergence on this one. Again, these things, while they do operate with differences among them, the overall market at the minute is more or less operating together as a big homogeneous unit. Is that going to be the case and continue to be the case? Well, I think, you know, it very well could be. Moving on then and taking a look at our friend Dogecoin, the coin which is, you know, really not worth anything other than Elon Musk's love. And here we have seen it come down as low as 46. Some people were waiting for it to go down to 40 to get in. Oh, dodgy. Well, it didn't actually make it there and has recovered up since. But again, unlike Matic, we haven't really taken out any of these areas that we, you know, on the way down the way that we were experiencing. We've only just recovered this yellow 8-period exponential moving average. Will we see things go well? I think that we are in a position to benefit off the back of this liquidity stop hunt. Dogecoin, or Dogecoin, whatever, slightly less so. This is really good to be trading in terms of just, you know, being kind of brutal about it and taking profit when it's there. That would be my main recommendation. But how about something else like Band, which at least has got a nice point of comparison to be made with the likes of Chainlink and has utility out there in the world? How's it been performing? Well, exceedingly well, essentially, since this potential sort of head and shoulders type move that led to that sort of stop hunt capitulation area. Seeing on the 4-hour time frame that we're staying above the 54-period exponential moving average is something you're going to want to look to across the coins that you're trading right now. If we stay above that, that's pretty good. Likewise, of course, we want to be staying above the 236 Fibonacci retracement point. Now, with regards to Band, this has been in a heavy upward trend, and it's nice to see it in no small part inspired, of course, by the movements that we've seen with the likes of Chainlink, but I've taken it from the Fibonacci retracement from the significant low that you would need to be drawing it in from up to the most recent high, making sure it lines up properly and showing you that it's only really at this point here recently, really in the last number of hours. What time is it right now? In fact, yeah, in the last part of this, in this 4-hour section here, that we've managed to break up above the 236 in the next 4-hour period candles. And of course, when you're watching this, a number of 4-hour candles will have gone by. The question is going to be, have we managed to see the prices stay above $16.80 in terms of an opening and closing basis consecutively, or are we seeing them lagging down the way? If we go down that way, then negativity in the market has ensued and we've not managed to structurally take out our previous highs, and things like this looking like it could recover will start to look like the start of a downward movement. Okay, I'm not anticipating that right now. Personally, I'm anticipating getting a bit more upside movement. You can see here again, we're right in the throes of coming across or overtaking the moving average on the RSI. That's nice to see, and once again here on this one we have some of that hidden bullish divergence with this low. Excellent stuff, fantastic to see it. And like you can see here, another nice cross on the DMI. Everything's setting up for the next move towards the top side. Therefore, could it be possible to come in with some targets? Not going to give you targets on every single coin, just want to show you how you could do it. If you take it from our most recent highs in terms of a Fibonacci retracement point down to where that stop hunt ended, ask yourself, where does the 1618 come in at? And that's going to be the big target that people are looking to, and that's for this coin at $25, really trying to get back into that chain link price territory. But the three targets to be aware of if we are going to be taking our previous highs are 22, 23 and then 25. Bear in mind our previous highs are actually coming in there at $20, and from where the prices are right now, even though we've recovered quite a bit, even if you were to just trade from where we are up towards our previous highs, you're talking about a 15% increase. Fantastic stuff to be had. Try and manage your risk accordingly. Look into these moving averages and the like to stay on the good side of the market. Other coins you might be interested in are things like CTK. It had a big withdrawal recently in its price action, and we saw similar types of movements in terms of, like, you know, horrendous downward price action, but then this was followed on by a slow and steady recovery, and then lower lows. Actually, it was followed on by a slow and steady recovery, a significant enough period after the drop down, and then we've never looked back since. Today, V-shaped recovery. Okay, so we have the V here. That's nice to see. Where do our profit taking targets come in at? Bear in mind, you can do all of the analysis I did on the other coins yourself. Looking down below, you can see big negative cross on the DMI in the 4-hour time frame. This is lining up potentially for a big cross if the ADX stays above the 30 zone and the DM positive and negative collide. That would be fantastic. We haven't taken out our structure of our previous areas like we see on some of the other coins, and we're just here positioned and saying, well, what's our upside targets and what's our downside risk? So long as we stay above, for instance, over here, the sort of 188 area, more or less, as we're sat here at $2, then I'm feeling pretty good for the potential for us to go as high as $3.28. That's obviously excruciatingly high compared to where we are right now. You'd be a fool to not look up to the highs. How does this compare to those profits we're talking about with Band? Well, actually, it's quite a good bit higher at a 20% increase. Not exactly, you know, lockstep movement across the board here, but we're seeing a similar pattern to how you might want to trade this. What else might you want to look at? How about DOT, one of the stars of the market recently? How's it been doing? Well, actually, while everything else really had a horrific move recently, and you can see here that all of our previous moves, our trading was fantastic. That's, again, if you ever needed an advertisement to like it and subscribe this channel and come back, hit that notification bell and not miss out on future videos. But what you're looking at here is, of course, a retest of the wedge which we broke out of, having come all the way back down here and really stop hunted the F out of everybody's A. Now we're coming back up the way, and we have done a lot better than what we've seen with other coins in terms of that difference between where we are now and I'm being very generous here by drawing it in from the bottom of the wick of this candle. We're only under 6% away from where we are. Again, you know, a great performer. DOT, fantastic stuff. We are then able to draw in conclusions, or at least, you know, potential for looking at where we could go up the way. No surprises for guessing where this could be. $34 as that 1618. What does $34 remind you of, you might be asking? And of course we have our friend Chainlink in here, currently sat there at $34, having experienced its own pullback down towards 27 recently, and just like DOT, performing very, very well. Where's our next upside target? Well, I actually did full-on analysis for Chainlink earlier on, but let's just kind of conclude this part of the video here by saying that we'll be looking at 45 really as our next one. I'm going to have a broader perspective on this one and point out that the 414 or the 4414 comes in here at $59. Big targets to be had. How are we going to get there in between? Well, first off, are we going to be able to take out our little in between targets? And we have a couple of these lining up with each other ish in here at the lining up here at $41, and that would be nice to see. As you can see here in terms of the DMI, that we have had this cross, but we're not quite on the strength of trend zone on this one yet. Could be about to see that happen. Anyway, I could keep going all day. I think you've got a good idea as to how to manage your risk in and around about these zones and what to look out for. If there's a star of the show in terms of what to look for right now, what could it be? What could it be? I wonder, and I would really like to know what your opinions are. One of them, however, could be VET. What we're seeing here with VeChain is that we've come up very, very high in terms of our body closes. You know, we've already actually managed to make it back up there already today. In terms of the wicks, not quite so much, but you know, that's all good. That's all good. Our upside targets at the minute remaining here at 0.07. That's fantastic. From where we are right now at 56, you're looking at a solid 20% rise up easy with this one if we're able to maintain the upward structure. Well, what are you talking about, Rocky, in terms of upward structure? We've already covered things like the moving averages here, the atomic numbers 8, 18, 36 and 54 for example. But what about this if we draw in the Fibonacci from the real extremely important zone down there at the lows up to the high here, and say that, well, so long as we stay above 52 as an easy to manage risk management zone, we're doing very well. That's the 4-hour time frame, and staying above the yellow 8-period exponential moving average and the 52 zone. Now if we go below that, you're looking for decent re-entries, and what could that be? Well, maybe 47 again, maybe where we see this wick having gone down to. And let's be clear, on this one it is performed with regards to precise numbers a little bit better than some of the others, having come down here bang on to the 50% retrace for that stop hunt conclusion. Looking up the way, we have got some magical numbers as well on the bigger, broader perspective. The 414, the 4414 coming in here at 71, lining up nicely with that 1618 more or less zone for our target towards the top side. Maybe that's going to be the star performer over the next couple of days. Who knows? I'm interested in hearing what you think. Leave your comments down below and I'll be sure to read them. And hit that subscribe and like button and come back for some more of this fantastic technical analysis. We do frequently get told here that this community is the best community. Of course, it's all of us telling each other it, because as soon as you join it, you'll never want to leave. Thanks so much for seeing you today, and I'll see you again next time. How about that? What about that? I mean, I might have fallen over myself a little bit when I was looking at the Tezos technical analysis, but I certainly ran through that quite quickly with regards to getting out a lot of the key points that you'd want to have. Things I didn't maybe mention, by the way, are the potential for us to see things like a heads and shoulders and stuff on the RSI down below. Maybe worth taking a look out for any of that sort of stuff if you want to as well. This is going to be a very tentative area for managing risk at, in terms of the 4-hour 8-period exponential moving average. You know, you're going to be finding yourself tripping over that fairly frequently. Think about it in terms of the 24-hour time frame, then you're really only talking about like a 3 or 4 period moving average at that point. You know, 3-period moving average, right, on the 24-hour time frame. Not exactly, you know, worth basing trades off of. If we do jump up towards the 24-hour time frame and you want to know, you know, how are we doing, then let's be clear that even with the stop hunt on the likes of VET, we didn't make it down as far as the 18-period exponential moving average. So plenty of things that didn't make it into the video, you know, overall. And we've just seen this crossing the ADX here. There could be potential more flux on this. I mean, of course there could be. We're up here at a high. We haven't really put in any lows, and I want to point this out as well. If we look across the markets now, my little clip that I made there, all extremely bullish. But let's bear in mind that on the 3-day time frame, that, you know, the red candles are fairly frequent, right? And we've not had one in quite a while. Jumping across these different for VET there, we haven't had one, but as you can see in a lot of the other coins, you know, we have had a red candle at least. But there's areas there where, you know, some of what looks like it's performing really well, Theta for instance, hasn't had any pullbacks for quite a while, so that's maybe worth pointing out, while some of them have. So I'm talking about operating in lockstep, etc., and maybe with these significant movements, algorithmic ones, then maybe that is the case. But there could be some little differences here or there, as we see some coins that performed better than others performing differently. Now Theta actually is one of the better ones to look at. This is the regular candles. This looks like Heikin-Ashi candles. Let me just show you the Heikin-Ashi candles. This is what this, you know, that's what, you know, this is Heikin-Ashi. This is the regular candles, and it looks like Heikin-Ashi. You know, this is just showing you that this is doing really, really well. Great stuff on this coin, in terms of where it's got to 350 at the minute. Now again as well with this, this is drawn in quite roughly. I just missed this area for us. You know, you can see the difference between the 0 and the 786 here. Huge, you know, huge girthy difference here. I mean, looking at these lows, we were down at 36 cents. Now we're up here at $3.60. This is of course 100x in terms of the no, we're down at 3.6 cents, you know, down here at its lows on the 20th of March 2020, you know, back from, you know, what we've seen. So we've whatever we've exited up this one, 350 from 3.5 cents here. We've 100x this coin already to get to where we are. So, you know, that's great and all, and we can see that the range is taking us between almost all. Let me line it up properly. The range over this has taken us, you know, that in the period of a week we could, you know, see this breaking down the way, etc., as we have done, as you know, as we've seen in the past. Let's just see how it goes. Like we saw last time when this happened here, that it took a wee while, but then we did break down, and when it broke down, we got a movement down the way. So just be wary of your risk, you know, because you're looking at a 25% drop off in price once pushing past the 236. If we see that sort of thing happen on a big time frame, these are the sorts of things that didn't make it into the video. They're not going to make into those little clips that I make. That's fine, you know. Anyway, cool, nice one. Yeah, that's me done, by the way, ladies and gentlemen. I'm going to join you in the chat. Cool. This is my favorite echo chamber, I mean channel on YouTube. Nice, like that comment. Sean Thomas, knowing what to look for on the smaller time frames to keep from being stopped out. Rocket knowledge, good one. Absolutely. Alex says, first time I've heard of a stop hunt. Crazy stuff. Yeah, and you can see it. You can see, I think if this is the first time you've heard of it, and I'm showing you, you know, what could potentially be a fantastic textbook example. For instance, on the Tezos chart, I showed you like textbook example of stop hunt now. Also textbook example of a stop hunt before the market initiated its rise towards the top side. Of course, you know, it's not going to be in the forefront of everybody's trading mind. It's more of a black swan type thing, and of course that's what happened really last night with the price action and the way that it went, you know, and we can see that with these crazy wicks and everything else. So it's not necessarily what's going to be influencing you as a trader necessarily all the time, but it's certainly worth knowing about, and then seeing it happen at the time and being able to see a V-shaped recovery, being able to draw in Fibonacci or whatever method you want to use, because, you know, on these lower term time frames, jumping down to the 15-minute here and kind of zooming in on the stop hunt, bring up hitting auto. So where were we? Theta's actually a bad one to look at for that. Just go to link for a good example of it. You know, we saw that that over here we broke down below all these moving averages, came back up, couldn't make it past them, then whooped down the way. Cool, okay. Then we had this recovery, started to look like it was tentative. This is looking like a V-shaped tweezer bottom. Fantastic 2-for-1 good recovery here. right? But of course, in this zone here, you're like thinking, well, I don't know. I mean, it could go either way. It could go either way. But then what you're seeing is this cross of the moving average, the getting confirmation. All of them crossed in at this point here, and we came back down and reconfirmed it, then moved up the way thereafter. And having these bits of knowledge to put together, offering you up decent entries for a move, even if you took a crap entry here at this point, you know, by getting in at the top, then sitting there and watching as the market moved against you 3% down the wave, having been up at 33 and then going back down to 32.5 and thinking, oh, maybe I did the wrong thing. Ultimately, you know, the market moving in your favor because you've identified already a short term, a small time frame, but long enough term, relatively speaking, trend where you've got like several degrees of confirmation past the point at which where you're able to say, how is this happening and what sort of rationale, RATIONALE or whatever, have we got for this price action that we're now seeing? Is it a valid recovery? Was it maybe a stop hunt where people were looking for liquidity, or is this the capitulation event in the market overall, and will we see further downside? And it's like, then you get the opportunities. And to be honest with you, when you look back in time or whatever, this was one of the best opportunities to get in on moves that we've had for a long time.